It's crazy one guy. Look at that. $5 right there. I have very small side right now.
LMKS 2 week, unfortunately. I'll pull back up GWH just in case. Again, this could be a trap. This could be so choppy. So choppy, though. Forming a nice little trend here. We'll see.
Look right here, guy. Look at this.
Yeah, just gonna let ELBM guide me. Nothing really changing here. Well, also, if you want it, let's pull up. Let's do a little bit of Q&A. Let's do a little. Not feeling great though. I'm feeling.
In 460.
Just got a cough. Cough.
I wait so long right here, guy. Waiting. When it break, exactly happened.
I'm watching two 15-minute charts at a time. Nope, these are 1 minute candles. These are 1 minute.
Right here. Get in right here. Screw.
Yeah, do you guys have any questions?
Right here, guy. Look at it. Crazy. Get
When
in.
did you buy ELBM? What time?
All down here. Right here.
I bought
right
ELBM,
here.
yeah, pre-market at $1.
Keep buying right here. Waiting.
Well,
I know I holding right here, guy. When it break 175, 475 right here. Whoa. Look at it. Volume pickup. That's all. And keep selling right here. Sell here. First sale is 93.
Watching glass wall. Here's the problem with ARTD.
90. Sell at 90.
It's just got so
93.
much resistance.
5. 501.
So much resistance.
All the way here. See what's going
Can
on.
it run? Maybe. But I just think there are better opportunities out there. To be completely honest with you. Like, it's
Small side right now.
Yeah, I mean, like, that's right. Like, we break out of our resistance and we just get a big slam. It's just got too much resistance, right? Like, there's another level.
Crazy, huh?
4 hours yesterday and pre-market today. Yeah, I just don't think that it's the easiest opportunity out there right now.
Crazy.
When I trade a stock like PRAX, no, I don't think it. You know how to trade phase 3 news. That's like its own setup within itself. Like that's its own thing. And yeah, to be honest with you, no, I don't really know how to trade. What is your favorite setup of all time that gets the most fun? I love a really good, strong multi-day breakout. It's like a really strong multi-day breakout. It doesn't get a whole lot better than that. I'll tell you. LMKS, by the way.
Good, just sell right there. Crazy. This one happened all the time. When it break 170 go down, 170 go down, 170 go down. Right here.
I think ARTD can be scalped.
3 times.
I'm not going to scalp it.
When it pump, I try to get in right here. I get in right here. Get in all the way. Holding. This is my A plus setup. It's working, guys. It's working.
There you go, links. LMKS. Strong.
Trying to curl back up right now. It should take some profit.
Well, waiting for a high day breakout, the LVM or enter in this consolidation range. At this point, I would consider a starter over 245, maybe that honestly 250 level is a little bit better. It's going to provide a little bit more confirmation for not that much more expensive of a price. That wick to me is pretty telling there at 251. If it gets over that wick, I would expect to see continuation. 245, I'm not quite as confident in that, so I only got to pay a couple cents a share more. So I'm going to wait for that 251. How do you turn a strong breakout? Just volume, and do you often anticipate the breakout or let it break by dips back to the breakout level? Strong volume, a reason to break out. Again, time is the best indicator. So like the longer it's setting up for that breakout, the better. So yeah, you want it to have a reason to break out, a catalyst of some sort, whether it's sector related, whether it's actual news, whatever. And then yeah, the longer it consolidates, the better. Now, I generally speaking am going to start in anticipating the breakout, but that doesn't mean I'm buying dips, or it doesn't mean I'm just randomly buying. Generally, I'm buying consolidation breaks near the breakout, right? I'm buying after a fake breakdown before the breakout.
CQ, CRW,
I can add
not WV. I got wrong over there.
So we're getting something interesting happening now. GWH is starting to detach from ELBM. ELBM is showing signs of weakness, and GWH is continuing into this uptrend here. So this is something I think worth keeping an eye on. I mean, ELBM is looking like it wants to break down, yet GWH is kind of just climbing. So
look at it, keep real high. I keep it running.
Gap down from the daily chart in the battery sector, keeps the sector hot. And why are we looking to buy? Well, because we're looking for it's just a market inefficiency at this point, right? It's like an inefficient. That's not good. It's just an inefficiency to $4 out of bounds. We're down $10 a share. Not to say that it has to bounce. I don't want to sit here and say that it has to do anything, right? But generally speaking, there are going to be shorts that are looking to cover at some point. There are going to be longs that are looking to buy an advantage. The stock's down, 60, 70% without a single bounce. So that's the concept of the first green day. Why they tend to work is just that it's an overextension to the downside. And generally speaking, when you have an overextension to the upside, we're bound for a pullback because there's going to be profit taking. Same exact concept on overextension to the downside. There's going to be profit taking from short sellers and people looking to take advantage of that buying action. Generally speaking, these stocks are not going to go to zero unless they do offerings or different scenarios where I guess that is possible. But yeah, for sure. Good questions, by the way. Good questions. GWH still intriguing to me. Very intriguing. The fact that we are just kind of at VWAP here, to be completely fair. Just kind of retesting VWAP. ELBM is trying everything in its power to stay strong here. Vivon, I don't know. You can go check. I actually don't know the current pricing. I think there are different options of things with stock to trade scanners. You can get like more basic stuff. And the whole platform is like you can do monthly or annual. You can do daily income trader. It just depends, I think, on the package you're looking for.
Let's see, breaking nail high or not.
Stockstrade.com. Then you can do a trial of the platform as well.
This is classic right here, break right here. Look at it, right there, guy. You jump in, look at the volume. Check mark.
Showing sign of a breakdown.
Check mark. That's all you need to do. Check mark, check mark, check mark.
We'll see if that was a fake breakout overview out here. I think back under 5, we start breaking under this trend here. We're breaking back under that $4 level. I think think that's probably just a fake breakout, but we'll say it's definitely staying strong.
That's a classic guy.
Did just kind of break out of our trends here as well. See, how's LNKS looking?
It's waiting a long time, waiting about 20 minutes right here. Waiting. 510 resistant.
What would be the entry you're looking for on GWH? You know, honestly,
Right here, 510. Look at it here.
it's not
Look
really
at
a
this one.
price thing. It's gonna be like a
Daily
price
chart. Look at
thing.
510. Look at 510.
Right now we're
Right
just
there.
grinding up.
Almost resistant right here.
Like buying stocks like that. That just kind of grind. Because they never really set good levels to buy it. They don't really like. Right now, the only risk level that I could really see.
Yeah, I sell some more right here.
Can't justify any of these other wick downs.
Just sell some more right here.
At least in my eyes.
Right here.
Yeah, it's not really a price thing right now for me. I like chaos with the yeah, the GWH, I don't really have a price that I'm looking to say, all right, this is where I'm getting in. Now, if we set a new low and curl around, if we set a low around 5 and start curling back, now I can maybe consider buying this break here over 5.4.
This is nice, clean right there. Freak out right there. Can go all the way back here? Don't know yet.
Around here, showing some signs of strength. It'll be interesting to see if GWH follows with that strength. Let's put the LBL over here on the right. Check out this fake breakdown under this 225 level. I'll be curious to see. Yeah, the LBM is looking strong. Very strong. The LBM. Very strong. I like that. Okay, now again, I would rather buy ELBM personally, I would much rather buy ELBM than GWH. 251 is going to be that key level risk on 220. It's going to be a wider risk play. Very nice ELBM. That now we've got two bullish confirmation factors working for us. We held that fake breakdown, and we kind of fake broke down again. A little fake breakdown through the VWAP. We had this support here at 225. We broke under that and broke right back around. This is looking like a solid contender. I still own EMBS. ELBM I had earlier. That's me. And no, I sold that 260. My best sell was
Need to break 510.
237.
To go back up here 550.
What would be an entry signal on something like ELBM? For me, just a breakout of this 251. We had a wick right here. Kind of breakout over this 250. And so for me, that's really my sign to look for a breakout. GWH, as much as I hate it, I almost tend to use it. It's just not nearly as clean of a setup. But like in the same breath, it's just been grinding up. I really don't love it. Well, I am tempted to take small time and high day. It's just like that's how I lose. Because then it's going to pull back at some point. It's just straight out from low. It hasn't had a single so I can just see myself getting chopped up in something like this, unfortunately.
This is a nice setup right here. Right now we're on ball plus. Need to break right here, go back all the way to 550.
Right now, ELBM is definitely in too much of a range. It's still range bound. We're not into clear yet. I don't think it is. But it is setting up. But you know, for now, guys, I think the trade is going to take some time. Bro, it's GWH better buy. If that's what you think, go for it, man. I don't think the intraday chart is justifying as good a setup in terms of a risk to reward profile. The daily chart, I would say, is really good. But the intraday setup is not as easy in terms of a risk level. There's no doubt about that.
Short started short right now.
Again, right now,
look at Randy.
Completely honest with you.
What did Randy? Randy keep going higher.
Nick says your comments are so helpful. Really.
Hold it. Crazy, Randy. Right here, new high. You see it? New highs, touch it. All the way up back.
Glad to help.
New high right here. Touch up.
Do you have a strategy?
Pull all the way up. Pull back. Right now, double top.
No. I don't really like these stocks.
Hey traders, awesome to see you all here. And again, thanks for joining. Just an important announcement. This stream here is delayed. If you want to get access,
look at daily chart right here.
The live stream, the live commentary,
all the way down. Right here, resistant right here, guys. Touch right here, resistant right there. See that?
In the description, just under this video, guys. And also, I want to ask you all kindly to hit the like button, subscribe to the channel if you haven't done that already.
$2, guys. $2 resistant, $2.
And then I drive home. I drive back to Colorado on Sunday. So
$2 right here, guys.
Yeah, no plans. Yeah, thanks. Thank you. Appreciate it. Yeah, she's great. She's great. Very rare to find someone that supports something as weird as trading. so openly. You know, it's not the most normal career path. So it's great. Yeah. But I got a long drive home on Sunday, so
try.
We'll see. Yeah, I gotta drive 26 hours starting Sunday. So I'm actually not sure I'll be live on Monday morning with you guys, by the way. That's a misprint there at the over here, by the way. I'm not sure I'll be live Monday because I'll be driving all day Sunday and then probably all day Monday. But I don't remember where that question started with, to be completely honest with you, or where that answer started. Oh, golf plans. Yeah, so no golf this weekend. It's also really cold here in upstate New York now. It's like, I woke up this morning, it was 31 degrees. So I think it's getting a little bit too cold. Fortunately, back in Denver, the weather is beautiful. Next week, it's high 60s and sunny every day of the week. I'll probably play a lot of golf next week, to be honest with you. When will I buy LMKS? If I do, I'm not at this point. It's the trade's done. Fake high daybreak, no news. Really, oh, it did happen. Well, there's I don't think there's truth anymore. So, anyways, yo, listen, move to Houston so you can play more golf year round. I used to live in Boston, and the problem is it's just so hot in the summer.
Knee volume, guy, knee volume.
Summers are just brutal. I'm not built for the heat. I like the cold. Denver is cool because you can play golf year round.
This one all the way down, volume go down, watching the volume, okay?
That's actually far from the truth. Denver is pretty good year round. You get like 2 months where it's questionable. Like you do get some days of snow, but I mean, generally speaking, the snow's gone. 10 or 11 in the morning. So yeah, I mean,
underneath here you need to get out or
I think the best of all my favorite worlds. Great weather.
try and go.
You go hike all the time. You go snowboard in the winter, which I grew up snowboarding just about every
You break out resistant double top.
Yeah, for me it's like it's
Watch out right here.
I have the perfect setup.
You break this one break right here. All the way up here.
Anyhow.
When you break 510.
Yeah. Lila Freya says there's no winter in Colorado unless you're in the mountains. Exactly. And
All the way up there.
Last winter in Denver was like, it was cold. It sucked. I was actually pretty upset because I had just moved there and I was like preparing for a
volume.
Last winter in Denver was definitely more extreme than normal. But this year I'm prepared for it. If that's what we get, that's what we get. I'm also doing a lot of traveling next year. I'm going to back down in Texas, I think in January.
Yeah, a lot of volume.
In January. Going to Curacao in February. So I had a lot of warm spots. I'm playing golf every day.
Volume, okay. Yeah, a lot of volume.
Yeah, Guard of the Gods. Last winter lasted 8 months. It did too. It literally was from like November to March. It was a long winter. And then in March, I remember I was like, we finally got like one really good week. It was like 60s and 70s, and then the next week after that, it was back to like 40s. I was like, stop. So we were out of this. Where in upstate are you? I am in Syracuse area.
Randy, look at Randy, see? Stuck right there.
Yeah, love it up here. I love home. It's a great spot. Got my family up here. And upstate New York is so many things. Congrats on the travel schedule. Oh, cool, you're in Central New York. I just went to all of Utica. Yeah. My brother went to school at Mohawk Valley. I know Utica quite well. Oskimitos. Best pizza. I mean, literally one of the best pizzas out there. Denver Crudo was born in Buffalo. You know what's really funny is I know so many people in Denver who grew up in Buffalo. Like, I think it's so funny. Denver, it seems like a lot of people move to Denver from upstate New York, and I get it because it's like you get the best parts of upstate New York without any of the downsides. 2019 we had snow in June in Denver. I remember I lived there in 2019. It was May, right? I thought it was end of May or early June. I lived there for an internship. I remember that. It was crazy. The Rocky Mountain National Park was closed in June because they had like 15 feet of snow up there. It was crazy. Bryce, did training change your life? Oh, GWH, explosive. I wasn't really paying attention. Excuse me. Nice move, GWH. Did training change your life? Undoubtedly. It changed my life in more ways than I can. It's the coolest thing. Yeah, I mean, it's given me access to so much freedom that I never really thought that I would have. So it's, yeah, I feel very blessed. Anyways, guys, listen, as much fun as it is, just shooting the shit and talking. Time to talk some Trade Funder, and honestly, I am, like the more I talk, the more I'm starting to talk here too. So, I think we're going to talk some Trade Funder for those of you guys that want to get access to a $25,000 funded trading account for a sweet discount.
Come on, rate 310, 510.
With Trade Funder. And then I'm going to be on my way. I'm probably not going to trade too much today, honestly. I already had a great one on ELBM. ELBM, by the way, is looking a little bit choppy, given the strength on GWH. Again, that candle is not still
510. Crazy, huh? Dumb right now. Try to dumb it. It's short right here, 510.
Anyways. Oh, thank you guys. appreciate it. Anyways, ladies and gents, for those of you guys who are maybe brand new here, first of all, welcome in. I always like to say that. We try to go live as often as we can. We shoot for every day, but as we were corrected by some of the hecklers yesterday, we live our lives and we like to have fun. So sometimes we do this for free for you guys, so you guys can get access to real-time trading. And the truth is, whether or not you want to join Trade Funder, we're going to be here anyways. Get to do this for free.
Chop, chop,
but
chop,
I
chop,
think
chop.
Trade Funder is a huge, huge advantage for those of you guys that are looking for a solution to your trading. Whether that be you got a small account, whether that means you're not able to take as many trades as you would like regularly because you're subjected by the pattern day trader rule, really, or maybe you just want access to another account. Matt and I both use Trade Funder. I use Trade Funder as in addition to my normal trading account as well. Because listen, the way I use Trade Funder is for big picture trade ideas. When I want to go balls to the wall on a trade, not balls to the wall, I'm highly convicted in a big setup. And I just want to really, really stand out because I get access to great margin with Trade Funder, as do everybody here. So basically, guys, for those of you guys who don't know Trade Funder, it's a fully funded trading account. We're partnered with T3, which is one of the largest prop trading firms in the country. Anyone who's anybody is going to be partnered with T3. And so with Trade Funder, you're getting access to a $25,000 funded trading account and $100,000 in margin. And so basically, this is, I think, a great solution for those of you guys who might be trading with a smaller account, who know that you've got potential as a trader, but your small account is limiting you. You're not able to take as many trades a week as you'd like. Or, what I see with a lot of traders is that generally, you're a little bit nervous to risk your own money because it's your own money. You're emotionally attached to it. I see so many traders who do so well paper trade, and then when they go to their real money, they feel that loss because it's their own money. But when they're paper trading, it's just paper money. It's just a loss. And this is actually why a lot of prop firms do so well, is because it removes that emotional tie to your money. And so I think this is a great way to go get access with Trade Funder. That's why, like I said, when I got a really high conviction setup, this is why I love to use Trade Funder then too, because I can afford to take bigger size and not feel as emotionally attached. And truly let that setup play out for the sake of that trade. So the way Trade Funder works is, again, it is a prop firm, meaning that you are going to be sharing profits with them. Now, they've got one of the best profit splits in the industry. Generally speaking, with a prop firm, you're going to be looking to split anywhere between 60-40,
Where the volume?
60%, the prop firm keeps 40%, or 70-30, where you keep 70%. With Trade Funder, that profit split is 80-20. So if you make 10 grand, you get to keep $8,000 of it. So it's in Trade Funder's best interest that you also make money. This is why we go live. This is why they partner with us here at Stocks to Trade. We've been providing trading education to traders just like yourselves for well over a decade now. Matt and I personally came up through the Stocks to Trade community. We've got a large group of millionaires here now. We've got a large group of students who are on their way to becoming millionaires. And I think it's really thanks to just having that community of mentorship and just a community of traders who are all working together for that same goal.
Break
We
510.
share trading ideas, we share trading strategies, we share our own market insights.
510 knee volume, guy, knee volume.
As a lot of you guys know, I always tell you,
It's a fake breakout right there.
with the person
14.
who's wanting to copy our trades, that's really not a winning strategy for anybody. Instead, come here to learn from, pick our brains, see what we're trading, see how we're trading it. I've learned my style of trading by culminating a bunch of successful traders and watching what works.
Knee volume, where the volume, guy? Where the volume? Crazy.
And I think one of the big things that also helps when you start getting that strategy down is being able to
Squeeze, but don't
not being worried about taking a loss, understanding that losing is part of the game. And Trade Funder understands that too. And this is why I think this is a really cool partnership in particular. Because with Trade Funder, you're getting access to that discount. It's going to be an $800 plus a $99 platform fee. If you're on their website and pay full
What's
price,
wrong with the volume, guy? Where the volume?
$1,600 plus that $99 platform fee. But since they're here with us, here at Stocks to Trade, and they know we create a community of great traders, they're going to be taking an extra bet on you. So it's going to be a discount off of their traditional pricing. On top of that, too, they've got really good risk management. They're not going to let you blow up their entire thing. All right? Meaning,
Volume, no volume.
$25,000. They won't let you do that, understandably so, because they're putting in $800. Right? They're not going to be betting $24,000 per trader. But they are going to be betting about $3,000 per trader because they understand $800. If that were all they're going to let you lose, it's really not that much, and it doesn't give much room for error. So they want to make sure that you've got that room for error because they understand it happens. So basically, the way it works is that they're going to give you an extra roughly $3,000 to lose. They're going to give you a $3,750 max drawdown before they shut
No
off.
volume at all.
Right. So I personally think if you're trading well, I mean that's well over a 10%.
I've seen men go from riches to rags in a single breath of the market. Not because the market changed, but because they didn't understand what it demands. They saw prices move and thought that was the signal. They saw others win and thought that was the strategy. But the truth, the market doesn't reward action. It rewards.
I sell somewhere here.
Every man wants to trade. Few are willing to wait. And that's why most lose before they even buy. I've stood in the bucket shops of Boston, the great halls of Wall Street, and I've watched the same tragedy unfold, decade after decade. The names change, the instruments change, but the emotions remain. Fear, greed, hope, desperation. And they all whisper the same poison, buy now, or you'll miss it. I used to fall for that whisper too. Until I learned the most valuable truth a trader can ever know, that the best trades are not taken in excitement, but in clarity. Now listen closely, because I'm going to tell you something that could save you from a lifetime of chasing shadows. Before I made a single buy, before I risked a single dollar, I had a test. 5 steps, 5 questions, 5 filters that separated my emotions from my judgment. They weren't rules I read in a book. They were forged in loss, paid for in pain. And every time I ignored them, the market punished me without mercy. But before I reveal that test, I want you to understand why it existed in the first place. Because without the right foundation, even the best system collapses. You see, most traders think the market is a battle between bulls and bears. But that's only the surface. The real war happens inside you. When I was young, just a boy,
Look at Randy right here. $2, guy. $2.
I could tell you where a stock closed the day before, where it peaked, where it faltered. I didn't have
$2.
I didn't need them.
Break 2.
I had memory and obsession. But obsession can be a double-edged sword, because when you fall in love with the market, you stop listening to reason. You start believing that your talent can outsmart chaos, and that's when the market takes you by the hand and leads you to ruin. There came a time when I realized that success wasn't about today.
Hold it right now.
It was about discipline.
This up
I needed to know where the
300%.
market was going tomorrow. I needed to know if I was ready to
Crazy,
act when
yeah.
the signal appeared. That's what the 5-step test is, a method to filter noise from opportunity. Now, before we reach those steps, let me tell you a story. A story about the day I almost lost everything. It was 1907, the panic. The market was in chaos. Stocks that had been soaring for months were now falling through the floor. Men were panicking in the streets.
See, no volume, that's why.
Until their throats went raw. I had been short the market, heavily. And as prices collapsed, my fortune grew larger than I'd ever seen. But in that euphoria, I made the same mistake that countless traders still make today. I believed the move would never end. I covered too late, then I went long, too early. The same system that made me rich became the weapon that destroyed me. When it was over, I had lost millions, but that loss gave me something more valuable than money: clarity. It forced me to build the 5-step test. Because I realized no matter how experienced you are, the market can still seduce you. It can make you see what isn't there. It can make you act when you should be still. So if you take nothing else from my life, remember this. The best traders are not those who act fast. They are those who wait with intention. Every great trade I ever made was the result of
This one tried to break right there.
Every failure came from acting in anticipation. Now here's what most of you do. You open your charts, see a breakout, and jump in. You think, it's moving, I'll catch the wave. But waves don't care if you're ready.
Break right now, no volume, crazy day, no volume.
Even a perfect chart will destroy you. That's why I built the 5-step test, to protect me from myself. And I'm going to share it with you. But before I do, I need you to understand the mindset behind it, because that's where 90% of traders fail. See, most traders think trading is about analysis, charts, indicators, setups. But what they miss is that analysis without discipline is gambling in disguise. I didn't trade because the market looked ready. I traded
Try
because
right there, volume, pick up a little bit.
Simple. When the market gave a signal, I had already decided what I would do before it happened. That way, emotion couldn't interfere. And here's something few will tell you. Patience is a position. Waiting doesn't mean you're doing nothing. It means you're aligning yourself with the rhythm of the market. You're allowing the crowd to show its hand before you show yours. If I could give every modern trader one gift, it would be this. The ability to wait without losing conviction. Because the market doesn't pay you for how many trades you take. It pays you for how well you wait. Now let's talk about reading the crowd. In my day, I didn't have moving averages or oscillators. I had the tape.
Share something here.
Every tick, every trade, every fluctuation told a story. The tape wasn't about numbers, it was about behavior. When a stock hesitated near resistance, I could sense exhaustion.
Something
When
right here.
volume dried up, I knew the big operators were finished buying. When prices moved without conviction, I waited, because the tape, like the market itself, has a voice. And it only speaks to those who listen.
Look at volume, pick up, so
You
squeeze.
modern traders have screens full of indicators, but you've lost the art of observation. You look for signals instead of stories.
So
Every price
squeeze.
tells you a story of fear, greed, and uncertainty. The secret is not to interpret it, but to let it confirm what you already suspect. And that's what the 5-step test does. It turns your suspicions into structured patience. Before I explain it, remember this. You don't need to know what's going to happen. You only need to know what you'll do when it happens. Now, the philosophy is clear. Trading isn't a guessing game. It's an exercise in self-control. The market rewards those who are prepared to do nothing until the moment is right. And when that moment comes, you don't hesitate. Because the perfect entry point isn't about perfection, it's about confirmation. That's where my 5-step test begins. Each step removes a layer of uncertainty until what's left is a clear, calculated decision. A decision that's not made in emotion, but in evidence. So listen carefully, because what I'm about to tell you is the same process I used to build my fortune. And it's the same process that can save yours. Now listen closely, because what I'm about to tell you isn't theory. It's the process that stood between me and ruin. Every time I followed it, I made money. Every time I ignored it, I paid the price. This test isn't about predicting the market. It's about confirming readiness. You'll notice, every step removes guesswork and emotion until there's nothing left but truth. So here it is. My 5-step test before every buy. Step 1, the line of least resistance. The first step,
Everything moving, guy.
before I bought anything, I asked myself one question. Is the market moving with me or against me? Most traders buy because a price looks cheap. But cheap is a dangerous illusion. Stocks are never too high to buy, nor too low to sell, if they're moving along the line of least resistance. That line is invisible to most, but you can feel it if you watch long enough. When prices rise and pull back slightly, then continue upward, that's strength. When they rally but fail to make new highs, that's weakness. The line of least resistance is simply the path the market wants to go. I didn't argue with it. I aligned with it. Think of it like a river. You can't fight the current. You must flow with it. If the market's general trend was up, I only looked for long opportunities. If it was down, I only looked for shorts. That sounds simple, and it is. But it's where most traders fail. They want to be right, not aligned. So the first test was, is the general market trending in my direction? If not, I did nothing. Because trying to trade against the market's momentum is like rowing upstream. You might move for a while, but you'll exhaust yourself before the river does. The crowd always shows you where the pressure lies. Your job isn't to resist it, it's to recognize it and ride it. When a
Right
stock
there.
and the general
Where
market
is
are
it?
both moving upward, that's your first sign of strength. When both are falling, that's your first
Look at
warning
this
of
one.
weakness.
Nice, huh?
Step one, establishing the direction of the tide.
Rennie, guys. Rennie
Step
moving
two,
good.
confirmation by action. Now that you know the tide, the second step is to wait for confirmation by action. I never bought just because prices were rising. I bought because prices proved they could continue rising. There's a difference between a move and a move that matters. In my day, I watched the tape. Today, you watch the screen. But the principle is the same. You must see the market prove itself. If a stock broke through resistance but immediately reversed, I waited. If it broke through, held, and then advanced, that was confirmation. Price must show its strength. You see, the market is a stage, and every price movement is an act. One act doesn't tell the story. You must see the sequence. I call this confirmation by action. Not by hope, not by indicators, not by what some operator whispered, but by what the price did. If the price action confirmed strength, I knew the insiders, the big men, the strong hands, were active. And when they're active, you follow, not lead. So the second test was, has the market confirmed my direction through action, not words, not analysis, but movement? If yes, then step forward. If not, wait. Patience here is vital. Because the first move after a signal often fools the impatient. The real signal is in the follow-through. If a breakout holds for several sessions, if volume expands with price, if reactions are shallow, that's confirmation. When a move is real, you'll feel it. The crowd begins to chase, and yet the price refuses to give much back. That's strength. That's the market telling you, I'm ready. Step 3, synchronize with the general market. The third step, and one most traders ignore, is synchronization with the general market trend. You can find the strongest stock in the world, but if the overall market is against you, it will pull you down like an anchor.
Randy, look at Randy. Look at this one. Tries to break right here, 125.
Market weakness. During the 1929 crash, I shorted everything that looked vulnerable, but I didn't pick at random. I shorted the ones that fell first, the ones that broke before the rest. They were synchronized with the general market weakness. Likewise, in bull markets, the best trades come from stocks that lead the advance, not follow it. Leaders reveal themselves early. They surge when others hesitate. They recover when others stumble. So before I bought, I asked, is this stock moving in harmony with the general market? If the market was up and my stock was also strong, it passed. If the market was uncertain and my stock still surged, it passed stronger. But if the market was weak and my stock couldn't rise despite effort, I waited. Because no man, no stock, no theory can fight the tide of the market.
It's a good one. Look at this guy. Up 369%.
Crowd and win once, maybe twice. But you cannot win consistently by fighting the collective direction. In trading, probability is everything, and probabilities favor the aligned. So I never bought against the trend. I bought with it at the moment when both my stock and the market moved together like dancers in rhythm. That's when momentum becomes conviction. Step 4, the test of reaction. Here's where most traders lose patience. They see a move, they see confirmation, and they rush in. But I never bought at first strength. I waited for the reaction.
Cool, not going down.
The market pauses. It breathes. It tests conviction. That reaction tells you whether the move was real or merely emotional. Here's what I watched. When a stock breaks out and then pulls back slightly, that pullback is the test. If it falls slowly, on low volume, and then turns upward again, that's strength. It means the weak hands are gone and the strong are holding. If it falls sharply with heavy volume, that's weakness. It means the insiders are unloading, not accumulating. So I waited for the reaction before every buy. I let the market show me its hand. Think of it like poker. The reaction reveals who's bluffing. You modern traders call it the retest, but it's the same principle. I called it the test of reaction.
See, resistance down, double top now.
The move has power behind it. and I only bought when that test.
This
proved.
one too, $2 guy, under $2 need to get
Has
out.
the market tested and held after a reaction? If yes, the move is real. If no, it's a trap. In 1928, before
That's the market, guy. That's the market.
that had been strong for months, suddenly failed this test. They'd rally, pause, and then, instead of stabilizing, they'd collapse on the next decline. That was my cue. I stopped buying and began shorting. That single decision saved my fortune when the rest of Wall Street burned. Because every great collapse begins with a failed reaction, and every great advance begins with a successful one. You don't need prediction, you need observation. So remember, don't buy the first rise. Buy the rise that survives its first fall. Step 5, the final proof.
All right, last sale right here. Done, I'm done.
Now, the final step, the most crucial of all, the one that separates professional judgment from amateur impulse. Even after a stock,
I sold all right here.
I had one last question to ask. Do the
$5.
behavior and conviction
Look
of
at
the
that.
market
Get out
confirm
all.
that strong hands are in control?
That's the market here. You have done.
The market moves in waves of manipulation and conviction.
Sell all right there.
Volume is the footprint of intention. When volume expands,
Double top right here.
the
Boom.
crowd is joining the movement.
Maybe all the way to
Volume
480.
contracts while price holds.
Or maybe 480
Others are holding. But when
or
volume
475.
prices drift aimlessly, the trend is dying. So I watched for conviction, not in words.
This one tried to collapse.
If the price advanced steadily with orderly pullbacks and no panic in either
See
direction,
this one,
I knew
485
professionals were in charge. If prices
or
spiked wildly, I stayed
475.
because professionals don't need drama to make
See, I told you, look, I right here, break.
quiet accumulation,
Go all the way up
not
here.
chaos.
Start to go
That's
down.
what the fifth
See?
step was about.
Right
Identify
here,
control.
410, 510 right there.
Accumulate.
Go all the way up, down.
You'll see volume increase on up days, but never collapse completely on
See,
down.
510,
That's conviction.
right?
That's
All the way
your
down.
And when all 5
Just
steps
take
are
profit.
the market is in your
Okay, and this one right here.
confirms with action. It's synchronized with the general trend. It passes the
Hey,
reaction.
traders,
Plan your trade,
awesome
guys.
to
Plan your
see you
trade.
all here. Again, thanks for
Only then do
joining.
you buy.
Just an important
Not before.
announcement. This is true.
Not
here.
after.
If this one,
Delay, if you want
it
to
hold right
access
here.
Not because it's magical, but
It
because
hold $2.
Because by that point, the market
access
has
to
already told you that
$2 very important. Under 2, they get out all of them, okay? Under 2.
in the description.
$2 very important.
they did.
Right now, reversal right now. Let's hold. Let's see if build a ball plus or collapsing.
It's not about predicting movement. It's about
I don't want to do guessing game, okay? No guessing.
more tools than I ever dreamed of. Algorithms, data, charts, indicators. But none of that replaces this: discipline, observation, patience. Without those, even the best technology becomes a gambling device.
Right here, 85, see that?
Ask yourself, have you passed all 5 tests? If you
85 million bear flash.
you're not ready to buy, because the market doesn't forgive haste. It punishes it, but it rewards patience.
People take profit, the short in control.
Not by trading every move, but
Be
by
with a bear flat right here.
When I followed my test, I didn't need luck. When I ignored it, I paid dearly. That's how I learned that the perfect entry point isn't about timing, it's about testing. You test the market, you test the reaction, and most of all, you test yourself. Because in the end, the hardest market you'll ever trade is the one inside your own mind.
Yep, the one
And when
inside
you
your
know
own
that,
mind.
You no longer trade against the market, you trade with it. You can have the finest system in the world, but without discipline, it will betray you. My 5-step test protected me, but it wasn't the test that made me rich. It was my obedience to it. The market punishes those who break their own rules, not because it's cruel, but because it's honest. Once I found a trade that passed all 5 tests, I didn't think, I executed. Decision-making was done long before the price confirmed. That's the secret few understand. The best traders make their decisions when the market is quiet, not when it's loud. By the time the signal appears, the outcome has already been decided by your preparation. I remember a trade in Union Pacific. Weeks of quiet strength, volume rising, price steady. It passed every test I had. I bought when the market confirmed. For days, nothing happened. Then suddenly, it exploded upward, clean and relentless. That profit wasn't luck. It was patience cashing its reward, because I didn't chase. I waited for the market to prove itself. Most traders today can't do that. They mistake activity for progress. They think movement means opportunity, but in truth, profit belongs to those who can wait. You can't force the market to reveal itself faster than it wants to. Your job is to prepare until it does. Now let's talk about the real enemy, emotion. Fear and greed are the same demons that haunted the ticker rooms of my time. You feel them today through screens. I felt them through the tape. Fear whispers, don't lose what you have. Greed whispers, double it before it's gone. Both are liars. The moment you act on emotion, the market owns you. That's why my test wasn't just a method. It was armor. It forced me to slow down, to earn each trade instead of chasing it. So when the market tempted me with early breakouts, I waited for the reaction. When the crowd panicked, I stayed silent. When everyone wanted action, I wanted proof. The five-step test wasn't about finding certainty. It was about building patience until certainty revealed itself. Understand this. The perfect entry point isn't about prediction, it's about readiness. The perfect moment isn't when the price turns, it's when you stop doubting. When your plan, your patience, and your preparation align, that's the true signal.
Let's see it, Bill
Not when the candle flashes green, not when Twitter says buy, but when your tests are complete. Only then do you act. Discipline doesn't mean inaction, it means delayed action. Action reserved for the right conditions. When all five tests align, the trend is in your favor. Price confirms through action. The general market supports your direction. The reaction proves strength and volume confirms conviction. You don't hesitate, you strike. Not with hope, but with clarity. Because hesitation after confirmation is as fatal as acting before it. You see, patience and decisiveness aren't opposites, they're partners. Patience prepares you, decisiveness pays you. The market rewards those who wait and then act with hesitation when the time comes. That's the balance I spent my entire career mastering. I learned it the hard way, through loss.
Okay,
in 1907, I made millions by following my rules.
Resistance right here.
I lost them by breaking
all the way down here. Let's see the VWAP right here.
It was me.
It'd be with the bear
The
plus.
market does. You can only control what you do when it moves. Every trader wants control. But real control doesn't mean forcing trades. It means mastering yourself while the market tests your patience. And believe me, it will test you. It will tempt you with false signals. It will reward your bad habits once, just to teach you pain later. If you want to survive, you must build habits stronger than temptation. The five-step test was my safeguard. It protected me from myself. It reminded me that waiting is not weakness, it's strategy. After every victory, I humbled myself back to step one, because success can intoxicate.
Okay, right here, ball plus.
Can humble.
When you break right here, you need to get out all.
You're
sell right here.
Go bigger. That voice destroyed
ball
more
plus, you tell me
than any bear market. After my biggest wins, I traded smallest, because that's when the danger was greatest. Not in losing, but in believing I couldn't. Humility is your final defense. If you treat every trade as if it can be your undoing, you'll stay alive long enough to thrive. Let me tell you one last truth. You don't trade the market, you trade your behavior. Charts are reflections of emotion, yours and everyone else's. The crowd acts out of fear. You must act out of logic. The crowd seeks excitement. You must seek
right there, huh?
When your behavior becomes disciplined, your results become predictable. The market will always move in cycles. Technology will change. Assets will change. But the psychology never does. The same emotions that drove ticker traders in 1907 drive digital traders in 2025. That's why my lessons endure. Because I didn't trade stocks, I traded human nature. And human nature never upgrades. So the next time you open your chart, don't ask, where should I buy? Ask, have I passed the test? If not, close your platform. If yes, step forward with conviction. That's the difference between gambling and trading, between guessing and knowing, between chasing and waiting.
Right here called ball plus. Support right here, $2. I told you guys, $2, remember?
You want my secret?
When it's 240, I say $2.
The market always gives one last chance to those patient enough to wait for it. Let the amateurs rush. Let the crowd react.
Now here, get out all.
Prepare. observe, confirm. Because when you master waiting, you'll realize something profound. Waiting is a position. If you found meaning in these words, share them with a trader who still chases the noise. Like the video if patience has ever saved you, and subscribe, because next time I'll show you the opposite side of the coin. How to exit before the crowd even knows the move is over. Until then, trade well, trade wise, and never forget, the market rewards patience, not prediction.
See, try right there. It's hold right, cannot hold right there, guys, Randy. This one supports, see? If you know how to read technical, it's working, guys. If you know how to read technical, it works.
The body scanner reveals the brutal truth about your body that your regular scale will never tell you. For weeks, my scale showed I wasn't losing weight.
People think valuing the stock is complicated. It isn't. What's complicated is the human mind trying to look smart. Every decade, Wall Street invents new formulas to impress itself. Discounted cash flow models, Monte Carlo simulations, weighted average cost of capital. Sounds sophisticated, doesn't it? But I've lived long enough to know the more complicated the formula, the less the person actually understands the business. I once said, if you need a computer to make investment decisions, you're already in trouble. And I meant it. You see, valuation isn't a number. It's a judgment. A judgment.
Right here, see? Both lot there, top,
the management
this is the back side.
and how long customers will keep coming back. That's not something you get from a spreadsheet. It's something you get from years of watching human behavior. When Warren and I look at a company, we don't start with the P divided by E ratio. We start with a simple question. If we owned the whole business, would we be happy to hold it for the next 20 years? That's valuation. Everything else is noise. In 1973, when the market was collapsing, everyone was selling because the model said so. We were buying, not because we had a better formula, but because we had better temperament. The easiest way to value a stock is to stop thinking of it as a stock. Think of it as a business. one that sells a product, serves real people, and makes real money. If the business is durable, honest, and run by people who care more about customers than about quarterly bonuses, you don't need a spreadsheet to tell you it's valuable. I've seen plenty of geniuses blow up because they couldn't resist showing off their intelligence. They build elaborate valuations that predict to the second decimal place, then forget.
All right, I'm done, guys.
Is this a good business?
It's a good one.
Most
See,
are.
pull back.
They're mediocre.
All right, bye-bye.
Some are downright terrible. But investors still buy them because the model said it was undervalued. That's not investing. That's self-delusion with a calculator. When I was young, I thought there must be a secret. Some